cooperatives have a duty to keep accounts. The logical conclusion of accounting work is a financial statement or report. The financial statements show how effectively the management of a company manages the resources entrusted to it. Incorrectly drawn financial statements may give a false impression of a company's financial situation. Depending on the laws of each country, the report is prepared either by national legislation or by international standards. Generally, the financial statements consist of a balance sheet, profit or loss statement, cash flow statement, statement of changes in equity, and an appendix. Depending on the size of the cooperation, some components may not be included in the financial statement. The reporting period usually covers 12 months and may not coincide with a calendar year. The balance sheet consists of an asset and liability, the amounts of which must be the same. The assets of the balance sheet include the assets of the cooperative, such as equipment, money, stocks, and so on. On the liability side of the balance sheet are the sources from which the funds were financed, for example, equity, loans, etc. The profit or loss report shows all income and expenditures related to that year. If, for example, a fixed asset is purchased during the year, the cost of the asset does not appear in the income statement, but only part of it is depreciation. Expenditure does not include credit principal payments. Expenditure includes only interest payments. This report shows where the money is spent during the year and from which sources the money is received. The cash flow statement usually has 3 sections. First, operating, then investing, and also financing. The operating flow reflects the movement of the money from the daily economic activity. The funding cash flow shall indicate the loans received, repaid, capital investments, etc. Investment cash flow shows how much money has been invested in the acquisition of fixed assets or other long-term investments, then proceeds from the sale of long-term assets and the movement of money by issuing loans and receiving them back. This report shows changes in the equity of a cooperative, contributions or costs from equity, reporting or retained earnings, and distribution of profits to the members. The appendix, or notes, explain the accounting policy in the cooperative, as well as explain individual items from the rest of the annual report. Depending on each country's statutory requirements, the annual report may require an auditor's review. The cooperative's board should be familiar with the auditor's opinion, as it may also point to any shortcomings or errors in the overall accounting of the cooperative, or in the annual report. Cooperative management signs the report, but the approval of the report is carried out by members of the cooperative in accordance with the procedures specified in the regulatory enactments. In conclusion, first, terms and conditions for the preparation of the financial statements are defined in the country's regulatory enactments. Second, the main components of the financial statements are similar in most countries. Third, in some cases, the financial statements of the cooperative may be subject to auditing. Now here's some questions for discussion. First, are the short-term and long-term items properly classified in your cooperative's balance sheet? Second, what useful information can the management of a cooperative derive from a cash flow statement? Third, does your cooperative follow the procedure prescribed by regulatory enactments for approval of financial statements and profit distribution? What are these arrangements for these issues in your national legislation? Fourth, why would the members of the cooperative have to read the financial report?